All right. Good afternoon, everybody. Uneducated Economist here. So I'm on my lunch break. I only have about 30 minutes, so this ought to be a fairly quick live stream for you. Astoria is frozen over. I cannot believe how much we are not used to frozen weather. Like we can handle rain all day long. We can handle 12 inches of rain in a short amount of time, and nobody really even thinks about it. But the moment that it gets below 32 degrees, this whole town is just like screwed, right? And it's amazing on like even the unpreparedness that everybody experiences. We had like here, I work at a hardware store, like a lot of you know that. And it was a pallet. Let's see, what do we have? We had a pallet of ice melt. There was probably 2,000 pounds of it on there, plus a bunch of other types of ice melt that we had beyond just that pallet. We sold it all yesterday, right? Probably, I don't know, 2,500 pounds of ice melt, of rock salt and different ice melts. This morning, we get a new shipment in, right? We got another pallet of rock salt, which was, 2,500 pounds, and then a bunch of other miscellaneous ice melts in. 2,000 pounds went out already this morning, right? So nobody is prepared to deal with like anything when it comes to below freezing weather here in Astoria. It's just incredible to watch. Um, Driving conditions are pretty hazardous out there, but I would have to say that most people are driving fairly decently. There are some, fender benders and stuff like that going on, and there was a few accidents that were fairly big, but for the most part, people are, doing okay as far as that goes. But anyhow, frozen weather here in Astoria. All right, moving on. 38 of you in here. Let's go ahead and talk about some of the things that are taking place within the Federal Reserve and their interest rate adjustments. This is something that everybody was convinced of just a few weeks ago, except for me. Like, I'm not convinced by the Federal Reserve's going to be lowering interest rates definitely into the future. I never did have that as far as one of my ideas of what it is that's coming from the Federal Reserve strategy. Now, I'm not trying to deny the fact that it may take place. Like, that very well could occur, but it's not coming from a lot of the decisions that, or from what I believe that a lot of people thinking are going to be the Federal Reserve's decisions to lower rates. Like, a lot of people say like the work is done, like inflation's come down, now they need to bring their interest rates down. And to me, like, I think about that and I'm like, why would they do that? Like, it doesn't make sense to me for them to lower rates when they are achieving their goals. Like, they've achieved their goals with the position that they are at. Right? And I know a lot of people will be like, well, they've gone too far or whatever, but ultimately that's their ammunition. And the market is where they want it to be. Right? Like, they got inflation where it is. People are fairly active when it comes to economic activity. There's a lot still taking place. Now, yes, it is slowing down and there is the fear of recession coming, but people are confused by that. Like, they don't know for sure. And they thought for sure that the Fed was going to be lowering rates a couple of weeks ago. So what is it today? We see that a lot of people are saying, well, maybe they're not going to cut rates or cut them as quickly as we thought that they were, or as much, right? The markets are completely confused. And I knew that was going to be the case. They have the Federal Reserve, and what they are using for their monetary policy has to keep the markets confused. They cannot know what it is that the Fed is doing. When they use the forward guidance, right? This is the difference between credible threats and forward guidance, even though it's very similar to the same thing. Forward guidance is when they actually state it, right? We are planning on doing this in the future. We are going to lower rates. We are going to raise rates. We are going to adjust the balance sheet roll off. We are going to do this in the next, few months or whatever. They actually make the statement that they're going to do it. What we heard from Jerome Powell was not that actual statement. People interpreted it as that, but it's not. He didn't say anything in there saying we are going to do this, right? It's because they don't use forward guidance anymore, right? Forward guidance is when they actually stated it, like, here's the press conference, we are going to do this. Now, it's still a credible threat, but it's coming from the narrative, right? All these Fed officials come out there and they, maybe a Fed president or something say, hey, my personal opinion says that we need to raise rates or we need to lower rates or we need to do whatever. And people take that as the position that the Federal Reserve is going to go into. That's not the case, right? There are many people who work at the Federal Reserve, and there are 12 people who vote on monetary policy with another 5 alternates. So to understand where it is that the Federal Reserve is going to be moving with their monetary policy, it's best to understand the strategy itself, right? And a lot of people don't realize that the Federal Reserve definitely had a strategy that was prior to the pandemic. And this strategy isn't like on the fly. They're not making decisions like based off of like, daily changes within the economy. They have this set from a long time ago, like a long time ago, all the way back to November 30th of 2018, to that speech that I constantly go back to, Monetary Policy Strategies for a Low Neutral Interest Rate World, given by John Williams, the Fed president of New York, right? The New York Fed president. And so when I think about that speech and I think about the issues that they had, that he was talking about, mainly that inflation was persistently too low, they solved these problems, right? And it's interesting to listen to where the Federal Reserve was looking for help on the inflation scenario, on inflation, right? Because when inflation was peaking out and the Fed says, hey, we are going to adjust our monetary policy, we're going to start lowering rate or raising rates to combat the inflation that we are experiencing, people hardly remember before that the Federal Reserve was keeping interest rates too low. Right? You remember how many people were saying this? That they had it too low for too long? They're causing inflation to run extra hot? Yeah. This was part of their strategy, to let inflation run extra hot, extra long for an extended period of time to make up for the fact that they had inflation running under their 2% target for the previous decade, since the great financial crisis. See, this is one of the things that people just really like. I mean, it's so difficult to wrap your head around the idea that money printing didn't cause inflation. Right? People are like, dude, you're crazy. You're absolutely nuts to say that, right? But yet have no argument when they tell me that I'm nuts for quantitative easing 1, 2, 3, and 4, expanding the Fed's balance sheet from $850 billion to over $4.5 trillion, failed to produce the inflation scenario that the Fed was looking for. But nobody can explain that when they say I'm crazy that the inflation or the money printing didn't cause inflation, right? But they can't explain that to me. When lumber was peaking out at $1,700 per thousand, and I was saying, no, it's going to go back down to normal, people said, again, you're crazy, right? The money printer has gone off. Lumber's not coming back down. Here we are, $520 per thousand or whatever it is today, $550 per thousand. Right? Lumber's back at its normal price. This to me, right, was more about the supply chain breakdown than it had anything else. And nobody really wants to like address this particular portion of the economy. They just want to say, no, just look at the Fed and all the money printing. But they don't want to talk about like the supply side of things because it's so difficult to see it. It's individual. Each part of the economy, whether it's lumber or you're talking about the food industry or you're talking about like manufacturing of phones, all these different components have a different supply chain, have different, distribution networks. They all act independently when it comes to like things when you focus in on like lumber and cell phones don't have anything to really do with each other, right? But yet you can see some of the effects that happen within lumber start to take place within other parts of the economy farther down the road as time goes on, right? We saw definitely, remember like when eggs were like, $12 a dozen or something like that, and everybody was calling again inflation money printer, right? And I was one of the few people who was out there saying, no, this is due to a lack of investment into new hens, new chickens to lay the eggs. And then I went actually, I don't know if somebody had sent it to me or I found it, but there was a Instagram video that I came across of an egg farmer who was saying just exactly that. We are not replenishing our hens. There is going to be a shortage of eggs. Do not let them blame this on avian bird flu. Right? This is us not reinvesting into new hens because we are not getting the price for it. And to me, that made so much more sense. But then when the price of eggs went up and everybody says, nah, this is money printer going off. You don't know what you're talking about. This is the Federal Reserve's fault. This is the government's fault. This is some conspiracy theory or something like that. And I'm thinking, no, it's an economic force. It's called the bullwhip effect. It's easy to see, right? So, all right. I'm just kind of going off here. I should read some of these comments. I can't see. It's so bright out. All right, live one. All righty, John, thanks for being here. Hey, everybody, hit the like button. Thank you, dishes. I'm in Corvallis, gonna ride this incoming storm out, waiting for the fallout. Yeah, this is like, I mean, luckily Astoria is not going to get hit that bad. It's gonna start raining tonight, so it should melt off most of everything that we have here. But Portland's gonna get hammered. I mean, from what I understand, they're gonna have a huge ice storm up there, and everything's gonna freeze over. All right. Hey, do me a favor, guys. We got 121 people watching right now. Go hit that like button. Let's get this up to 100 likes before the stream ends. We got probably another 20 minutes on this. Fed officials definitely have fun saying all these things. Yeah, and that's just the thing. Once you understand the Fed's strategy, I think that's probably the most important part of this video, is to understand the strategy for yourself. Because once you start looking out there and you start seeing some of the news articles that come in and stuff like that, you recognize the credible threat right away. We all knew it. Like, a lot of people who follow this channel, who understand, like, you know, the Fed's monetary strategy starting from prior to the pandemic and some of the conditions that have happened here, we recognize the credible threats like right away. Like, soon as the Feds, you know, came out with that little bit of like kind of like an idea with their dot plot map that there's going to be lowering interest rates into the future, and the mainstream media just took off with that narrative and went with it, the Feds backed off and says, yeah, just let them do it. Just let them do it. They'll adjust they will adjust interest rates on their own. They will do, like, mortgage rates will come down. The 10-year came down. All these interest rate adjustments starts to take place, and the Fed didn't do anything. Like they literally did nothing at all, right? It's except for just, you know, use a little bit of words, you know, come out there with the credible threats. And so this is how they do it. Like, anytime they need or feel that things are moving in a direction that is not appropriate to what they feel is needing to occur at this time, they'll just put out some words, right? That they plan on doing something into the future. There was a time when the Fed hardly said anything. See, this is what I think is you know, pretty critical about the way the Fed conducts themselves, is that, you know, back in the 90s or whatever, you would hardly hear anything coming from the Federal Reserve. And when they did speak, it was so difficult to interpret what it was that they were trying to even say. It was Alan Greenspan back in the day. He even had, like, you know, this quote saying that if you understood me, or if I made myself particularly clear, you probably misunderstood me. Yeah, you know, this is because they chose to use words that was very confusing to the markets. They didn't want them to know what the Federal Reserve was doing. But once they hit the lower bound of zero, their monetary policy essentially became ineffective. Right? So lowering interest rates would no longer stimulate the economy like it once had. And they knew that. They knew that was going to be a problem. Right? And I mean, this was like a problem they knew about all the way 23 years ago. I mean, Ben Bernanke was talking about it. So they knew that the situation was going to come when the interest rates hit that lower bound of zero. Once it did, and their interest rate adjustments became ineffective, they knew that there was going to have to be some other system that they could use in order to adjust the interest rates, or at least the people's perception, right? To start having them actively participate in the markets without the Federal Reserve adjusting rates. Right? See, just that, think about what happened with mortgage rates here over the last week. They've gone down, right? People are getting excited. They're thinking, oh man, if I buy a house now, lower rates into the future, this is my opportunity. I can jump into it. They're starting to make economic decisions based on this idea that the Federal Reserve is going to be doing something into the future, that is setting yourself up with an expectation, right? If they don't do this, this is going to be very painful for me. But I'm going to position it because based on this idea. You see the problem with this is? See, now I look at the average inflation rate over time, and knowing that they have no mathematical metric for it, right? And with no mathematical, systematic way of saying, here's what inflation is according to what we feel is going on right now to adjust our monetary policy to, if they don't have that formula, then it becomes completely arbitrary to the Federal Reserve. Like, they get to do it whenever they want. They're going to be like, hey, we met our goals. How do you know? Well, we're just saying we did because, we feel like it, I guess. I mean, if there's no mathematical formula to it, then there's no way of knowing what it is that they plan on doing into the future. And so when I read their speeches, this is where it's critical. Like, if you read their individual speeches, they don't bullshit in them. Like, they put all kinds of BS out there on the mainstream media when they're talking and doing the interviews and stuff like that. I look at this stuff and I'm thinking, what? It was just like, what are you guys talking about here? You go and read their speeches, the Federal Reserve speeches themselves, and what they have to say about monetary policy, it makes it so much easier to understand what it is that they are planning on doing, because it's not what everybody in the media is saying. Look at all those links I leave down in the description. They are all confused. Every single one of them is confused about it. They even say stuff like they were wrong about the dot plot map back, 2 years ago or a year ago or whatever it was. But then they use the dot plot map to convince themselves that the Federal Reserve is going to be adjusting interest rates based on that. Like you just said, like literally in this interview, in this YouTube interview, right? The individual, the girl said that, like straight up. She says they screwed up, were completely wrong on their dot plot map, a few years ago. And then goes into saying about how they're going to be lowering interest rates going into the future based on the dot plot map. And I'm like, are you serious? Like, I mean, you just discredited the exact evidence that you're going to use. That's just like, this is how come they're so confused about it. This is why they don't understand, And so, again, like, internalize this stuff, right? Take into consideration that today we face an altogether different set of problems stemming from a very low neutral interest rate. That is the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. So their problem of a persistently too low of inflation has gone. They don't have that problem anymore, right? And I think about like even Michelle Bowman in her recent speech, I think it was towards the end of November, talking about monetary policy. Even in that speech, I was just reading it like over the weekend. And in that speech, she says that it's her base view that there would need to be future rate increases. This was 6 weeks ago. A voting member of the FOMC stating in a speech that it is her base view that there would need to have further rate increases. Where do you find that statement anywhere in the mainstream media? Right? It might be out there. I don't know. I didn't find it. Maybe Michelle Bowman did say that to some interview somewhere, right? But I can't find it. Everywhere I find is this them saying, oh no, we peaked out. We're done raising rates, and if anything, we're going to be lowering from here. That's pretty much what everything that you hear in the mainstream media. But you go to their speeches, they don't say that. They say something completely different, right? And so that's again, like, understanding this stuff for yourselves. This is why I feel like my channel and what it is that I'm doing here is so different from everybody else. Everybody else accuses the Fed of some kind of evil intent, which, don't get me wrong, the outcome of what happens is somewhat evil when you consider that the people who are closest to them get to really get to have an abundance of stuff, right? I mean, they get the wealth unlike anybody else. We all suffer at the end of the line working damn hard to provide all the things that they really truly want with their life, right? We'll just pay these hardworking stiffs down there, and they got it okay. They live in America and all this other stuff. But here we are, we're cronies, kinda. Ultimately, that's what we are, capitalist cronies. And as we separate the rich from the poor, I mean, it is a good system for you, right? I mean, like, to me, like, I look at it and it was just like, man, if this goes on there's going to be such a separation between the rich and the poor, it's just going to make it seem so, like, ungodly amount of separation, right? And this is what happens with the Federal Reserve and the central banking. Like, there should have been a collapse back in the 70s when we went off the gold standard. The Federal Reserve should never have been able to go on to a complete fiat standard, especially when it comes to the world reserve currencies. It gives us the ability to freely spend, buy the world's stuff without really having to produce anything except for debt. It's not a good thing. It's not a good organization, right? Nothing about it is pleasant or any of that stuff, right? But the fact is that it's here, right? And there's nothing we can really do about that. Now, we can wish and pray and hope that they do things in a way that is most appropriate for our beliefs and our opinions, but that ain't gonna happen either. And it doesn't really matter what we want. It doesn't, like we are inconsequential to this whole strategy altogether. There's nothing we can do that's gonna change that. And now that I understand that, and I understand it on a different level, it's not up to me to try and get people to change the Federal Reserve or to try and shut the Federal Reserve down or end the Fed or anything else like that. I mean, that ain't going to happen. What I'm going to do is understand the Federal Reserve in a way that I know their strategy as good as they do, as much as they do. In fact, they can't hide it from me anymore because I can't unsee it now. And when everybody else wants to say that the Fed screwed up or that they're causing all this pain and they don't know what they're doing and all this other stuff, I'm finding the reasons why they are in the position that they are in today and how it is that I can best appropriately deal with that position. Right? I mean, this isn't a game. We're not screwing around here. I mean, we only got one shot at life, right? And if you screw it up, then, because you put yourself in the wrong position, then, you don't get a second. I mean, you might get a second chance at it, but it's not like second chances don't come very easy. Right? All right, man. I'm really going off on this. I don't know why. What time is it? 20. Okay. I'm sorry I'm not reading any of these comments. I should go through here and start reading some of these. All right. I love Uneducated Economist, but he does not realize politics are the same thing as money. Bullshit. Like only looking at a tree and not the whole forest. You're absolutely wrong on that, man. Absolutely wrong. Right? By viewing it through the political eye, this is what's going to end up happening. This is why I call it, right? This is why I call it that way, is because you have government, you have an economy, you have the people's decisions, you have environment, you have all these other things, and they all impact each other. Right? There's no doubt in my mind that the government can impact the economy. Here's the problem with it is that there's economic forces that are taking place out there that people want to blame on the government. Right? That's the issues that I have with it, is that people are like, well, tariffs or taxes or all this other stuff. Guess what? None of those things would exist if it wasn't for the economic forces that are out there. Right? Understanding the economic force then gives you a much better view of what it is that the government is actually doing out there, because they're reacting. They're not causing. Right? And that's important to understand, is that they react. If the economy wasn't in the position it was in, then the government wouldn't be able to do the things that they do. Right? Again, it's really important to understand. If I took on, this is something that's really, this is probably the most important key to this, to understanding this. If I take the view of the economy on through the eyes of a political view, okay? Now I'm looking at the economy, but before I can look at the economy, I have to put this layer of political view in front of it first. So I'm looking through this political view into the economy and then trying to understand what's happening from that. Here's the deal. If I take it in from that position, right, whatever decisions that I make for myself, right, when it comes to the retirement, to taking out loans, to buying the house, all the other stuff is going to be through a political view, which means that if the wrong person gets voted in, then my life gets screwed up, right? Because the wrong person's here, and this political view that I have taken and positioned myself with now has expectations going through that. If this person doesn't make the right vote, if this person doesn't, get voted in, if that person gets voted out, if this and no, you see all this stuff, and now you got this political view where if you just wipe that stuff out, then you wouldn't have that as part of your outcome. Right? Now I don't look at it through a political view. They can go ahead and do whatever they want. I understand the economic forces that are taking place here and that it spans through administrations. Right? Looking at it from this view no longer has me with an expectation of the right person being voted in or making the right, choices or doing any of that other stuff. I understand the economy in a much different fashion, and that the political view doesn't change my expectations ever at anything. Right? And that's where I think the confusion really sets in. You can do this through a religious view. You can do it through social impacts out there. You can do it through environment. You can do all kinds of stuff. You can put this view, you can put this layer in front of the economy and say, this is the reason why. All these social behaviors, the way that people conduct themselves, all the medias, all the other stuff, this is the economy. And then you can see it through that filter and then look at the economy through that. And all the things that take place within the media, within the social environments, all the movies and songs and all the other stuff is the layer that you are looking at as the economy. You're not going to be able to view it. You're going to be, everything that has to do with that is going to be the reasons why this is occurring. But it's not. This is a reaction to that, right? And that's really where it comes down to. Understanding the economy in the forefront and then realize that everything reacts to that is a much better position to be in, because then you can recognize the economic forces. I could blame pork production and chicken production coming down. I could probably find the articles and the people and the reasons and all that other stuff to blame it on a political view, right? To blame all the lumber sales or the lack of lumber, all that other stuff. I could probably look at it through a political view. In fact, a lot of people did, right? And if you did, you would have totally missed it from a supply side of things like I was looking at it from, right? I'm not trying to say that politics aren't important. What I'm trying to say is that politics clouds your view of the economy because they are reacting to the economy, not causing it. And that is very important to understand. Right? I mean, you have to understand, I was incredibly politically minded. There was a time when I knew every single congressperson and every senator. I knew all the bills. I knew all the stuff that was happening, and I was an angry individual because of it. I mean, I blamed and pushed and showed and just like all kinds of stuff and said, this is how screwed up this world is because of these people. And then one day I said, that's it. I ain't doing this no more. I'm not looking at economy. I'm not looking at politics. I'm not looking at anything. I turned it all off. I got rid of my cell phone and I just went completely black. Blacked it out. Done. For like a couple of years. I did that. I was like, I'm done. This is too depressing. It's too stressful. I can't do anything about it. And I just gave up. And I was just like, I'm not following this stuff anymore. Right? I mean, I lost my house, foreclosure. I was going like everything bad in my life was taking place at that time. And I was just like, that's it. I'm done. And then one day, and it was actually right after Edward Snowden, right? When he came out and said, hey man, they're tracking you through your cell phones. Right. And it was just like people would admit it. And I'm like, that was one of the reasons why I wouldn't carry a cell phone is because I was protesting. I'm like, dude, they track you through your cell phone. You do realize this, right? And nobody wanted to believe me until Edward Snowden came out and everybody believed it after that. And I'm like, see, I told you. Shoot, now I wish I had a cell phone, right? Because I really did want one. I wanted one. I just wanted I was just protesting at the time, right? So once I got my cell phone back and I started doing research again, right? I got internet and started, like Facebook and stuff like that. Once I started doing the research again, I told myself, just follow the money. You don't need none of this other crap that's out there. You don't need to follow that stuff. That stuff is not important. What is important is the money, right? Follow the money, follow the creation of the money, follow where the money flows, how the money is, moving through the economy, find out how the states react to it and how different countries are, deal with the macroeconomics level of things. I just stuck to that. And that's the only thing I would stick to. And man, did it clear up understanding the economy. I mean, when I realized that once I got politics out of my view of it, everything cleared up. It was just, everything started making so much more sense. And that the politicians actually are reacting to the economy and not causing it. I looked at it the other way. I used to think, man, these politicians are causing these things to happen. They're not, they're reacting. Right? And understanding how they are reacting and why they're reacting makes so much more sense now. Right? And that's why I just don't follow politics. It doesn't make any sense to me. I mean, I look at the politics and how they react a lot of times. You can't say like the stimulus packages coming out of the government didn't have some sort of impact on the economy. It did, of course it did. But it was because the economy was in the position it is the reason why they needed to do it that way. And in order to keep things going, believe me, the next time they go into a stimulus is going to be way bigger than the last one. They have to. Each stimulus package has to come out bigger and more than the previous one. So the next one, I don't know how that's going to look, right? It's going to be incredibly extraordinary. And people are going to talk about how the Fed can't do it and they don't know what they're doing and they can't handle this and all this other stuff. They already got a plan. They already know what they plan on doing here for the next one, whether it's central bank digital currencies or negative interest rates or cashless societies or something. This is what they do. They plan to deal with the next crisis. And, to think that a politician has something to do with that, I don't see it. Like, I don't see it anywhere in their speeches, not anything that I read, going past, present, future, any of that stuff. I don't see it. Like, I don't see where they have the administration or anything that they had going on in the administration anywhere in their thoughts. Like, at all. Donald Trump. Jerome Powell needs to be fired, right? There's no inflation. The Fed should be printing money. They should go into negative interest rates. This is all what Donald Trump said. Like, I don't trust that. I don't believe that whatsoever. Like whatever it was that he had for an economic strategy when he was saying that Jerome Powell should be fired, the Fed should be printing money, they should take interest rates into negative territory. This is what Donald Trump was saying, right? And I'm looking at it and I'm like, what in the world? That doesn't make any sense. And then I realized he was actually trying to benefit the Federal Reserve by making those statements, which is really difficult for a lot of people to understand because it seems so like he seems so aggressively hating the Federal Reserve at the time. How much time is it? 30 minutes. Okay. I only got a few more minutes here. But he was so aggressively hating the Federal Reserve at the time. And this is what I found very interesting when I was watching it. It was like, why is he doing this? Like Donald Trump appointed Jerome Powell. He says, dude, you're going to be my man here for the Federal Reserve. Right? This is what Donald Trump did. And then before he left office, he was in a fight with Jerome Powell, saying that Jerome Powell doesn't know what he's doing. I want to fire him. Right? That he should be taking interest rates into negative territory and printing money. And I mean, this is all stuff that Jerome Powell or that Donald Trump was saying to Jerome Powell. And I got to thinking about that. I'm like, he doesn't really want this. Donald Trump does not really want Jerome Powell to lower interest rates and to print money and to go into negative territory. He does not want that. Like, that doesn't make sense. There is no economist in the entire world who would look at Donald Trump and say, dude, you the man. Dude, that is so smart. Like, just say it to yourself right now. Does that sound intelligent? Of course it doesn't, right? Because of the experience that we just had. At the time, you probably would have defended that idea. I didn't, right? But what was really going on there is that the Federal Reserve had peaked out on their Fed funds rate. They couldn't raise rates any further than that. But however, if you can lower the inflation expectation, you can raise the real interest rates. That's what Donald Trump was trying to do. All right. And he could totally do that by getting out there on the mainstream media and saying there's no inflation. The Fed should be printing money. They should take it. And just going on and on and on and on that. And if you say it loud enough and long enough, people will actually believe it. All right. And so by lowering the inflation expectation, he was raising the real interest rates. And that's what the whole goal of that was. There was no intentions on taking interest rates into negative territory, nor did he want the Federal Reserve to print money. That was not their outcome. That was not what they wanted for an outcome. What they wanted was to lower the inflation expectation at the time to raise the real interest rates. A few months later, the Fed goes into money printing. They did lower interest rates and then eventually fire up the quantitative easing and then dealt with their main problem, which was a risk of inflation that was persistently too low rather than too high. They solved their problems after that. Wow, I really went off on this live stream today, guys. All right. Sorry about that. I should have gone through and asked and looked at a bunch of questions. There were comments, but I think we had a lot of fun here today. I covered a lot of stuff. I'm going to do another live stream on Wednesday. We're going to talk about that Michelle Bowman speech. I think that's really important to kind of cover because it was only 6 weeks ago, and she is a voting member of the FOMC and very prevalent within the monetary policy strategy. So I think it's probably important to go through that speech and really get an idea of how these voting members are thinking, right? Because it's not what I think a lot of these economists and investors and all these other people who are wishful thinkers are believing out there. I think they got it completely wrong. They missed it. They missed the Fed strategy when they were going into, lower interest rates and causing inflation. They misunderstood why that was happening, and they misunderstanding that there is an average inflation rate and not a 2% target anymore. I mean, all this stuff is there. If you miss this, then you will not get the Fed strategy, right? I mean, if you do, like just that average inflation rate, that alone has so many people confused because they believe that there is a 2% target. There's no target. In fact, they don't even know how they come up with the average inflation rate to begin with. There's no mathematical formula for it. So there's no way that any single person out there who's not a voting member on the FOMC could possibly say that they have achieved their goal because they don't know. Like they don't even have a mathematical formula to say no. I mean, I figured it out. I went and got the data and I did the mathematical formula and they have achieved their 2% average inflation rate over time, right? You can't do it because there's no mathematical formula to do it with, right? So therefore, it doesn't exist at all. So people saying, no, they've almost achieved their goal. How do you know? You know, right? It comes arbitrary to the Fed. The Fed says they're getting close to their goal. What is it? I mean, they don't tell us what the goal is. They just say, hey, we're getting close to our goal. But we don't know what that goal is. We want to assume it's a 2% target, but they're telling us it's not a 2% target. And they're saying it's an average that we don't even have a mathematical formula to figure it out. Right? I'm not confused by that. Like, I get it. Now I understand that the Federal Reserve is looking for a particular spot in the economy that is not the inflation scenario, right? That's not what they're looking at. Everybody else is looking at that. So once they do adjust it and they start talking about the reasonings they are adjusting the inflation, or I'm sorry, the interest rates to combat the inflation, and they tell us in those speeches, we are adjusting rates for these reasons here, right? Then we'll start to understand where it is that they are coming up with this average inflation rate over time. But until then, we are just guessing about what that's going to be. Like, even me, myself, like, I mean, I don't know what their average inflation rate is over time. I mean, I'm trying to figure it out. I go through all their speeches, I go through everything, but it doesn't seem clear at all. And so when people say, no, they have clearly met their goal, I don't think you know that, because I can't find what their goal even is, All right, this was so much fun, guys. I got to go back to work, though. Thank you for hitting the like button. We are up to 76 likes right now. It'd be nice if that was 100 likes before I end the live stream. When I go to upload this video, people will see that the likes to the view ratio is really high. It'll be good for the algorithm. YouTube will spread this video around, and maybe Uneducated Economist can make some money. The Creature from Jekyll Island book by G.O. Griffin is a good place to start. Yeah, that was a great book. I've read that book. I met the author. Actually, I had a lunch with him at Hell's Kitchen in Vegas and spoke on stage to the same audience as he did. So G.O. Griffin is a really cool guy. Like, I mean, I spent some time talking with him. And that book probably, I mean, I have not read but maybe 6 books in my entire life, and that's one of them. It took me forever to get through it because it's like this thick, right? But, it took me 6, 7, 8 months to get through that book. And when I finally did, it was just like, boom, man. Now the floodgates of knowledge started flowing in, because as I started reading more, I started understanding why the things were occurring the way they are. A very good book. I mean, The Creature from Jekyll Island is beautiful literature. Anybody who is trying to understand macroeconomics, or at least the Federal Reserve, should read that book. I mean, it's almost as if it should be like high school mandatory reading or something. All right. Okay. Good day, guys. This was so much fun. I enjoyed the hell out of this live stream. There's some links down in the description. Be sure and come back on Wednesday afternoon for the members only live stream. Now, I do charge $1 to be part of the, to join the channel, to be a member of the channel. But it's only $1 to you. It's everything to me. It makes me work harder at what it is that I'm trying to bring forth, because I'm actually charging you for it. It makes me want to bring more value to it. And so, yes, it is a paywall to join the membership, to be part of that live stream. But what you get out of it is worth so much more. I read all the comments. You have a chance to ask other members within the live stream questions about what's going on. They are very informative group. We are very serious about this topic. We take it, very seriously, so that we can position ourselves in the best we can. It's and I feel like I put more energy and better energy into those videos as well. Like, it gives me an inspiration that I haven't felt in a while. And I'm looking forward to them. Like, I really look forward to these things to do what we do. All right. Uneducated Economist, guys. You let me know.